Well, let's move on to our next corporate conversation. And the company we're putting the spotlight now on is Kaynes. The company had a pretty steady quarter. In fact, the numbers look very, very good, if you just look at them optically, because the revenue growth was 58%. Though some will argue on the street it was a tad shy of really elevated expectations. The company also saw solid margin expansion, and the order book has seen a year-on-year growth of nearly 50%. Mr. Jairam Sampath, CFO of Kaynes Technology, is with us. Mr. Sampath, thanks for joining in. So it's all guns blazing, right? Your top line is growing at nearly 60%. You've had margin expansion. Your order book is swelling. And I think in the call, you guided for better working capital cycle and higher operating cash flows going forward. So there's just, so much going on. Before we talk about the base business, I actually want to come to your new businesses that the street has been very excited about, because they're all now, chugging along. There's the OSAT facility, where apparently you've already tied up 60% of that capacity with the, in terms of orders. And then there is PCB. And everyone's so excited about these printed circuit boards, right? Just the other day, we heard Amber announcing an acquisition. There is obviously Sirma that's setting up this huge capacity in Andhra Pradesh. So let's start with the newer businesses first in terms of what their contribution is going to be as we get into next year, and how's the ramp up shaping up, OSAT and PCB.
Sure. A very good morning to you and all the viewers. I think you got it right. I think the existing businesses are doing well. Like I've said before, these are all businesses which work over the long term, in the sense that order books typically span more than 1.5 years or so. As far as new business concerned, we were quite lucky that our OSAT business, we were the first in the country to ship out assembled wafers, that is integrated circuits. And this was a 5 wafer module, which we shipped out for one of our clients. And you're right, a bulk portion of the first phase of capacity has been already tied up. And there are 3 major clients, and each of them potentially can tie up more than what we've offered them yet. So from that perspective, it's doing well. And I think our main plant is also getting ready. And by the end of the year, the pilot plant and main plant both will be functioning in Sanand. As far as the PC board is concerned...
Before that, sir, Mr. Sampath, before we talk PCBs, now that the plants are getting commissioned and 60% of your capacity is tied up, what are we talking in terms of revenue accretion? Say maybe, I'm not sure how much you'll book in the second half this year, if at all, but if we talk full year basis, FY27, how much revenue will you start getting from OSAT?
See, I wouldn't be surprised if we exceed about 1,000 crores in OSAT in FY27. Though earlier projections were about 1,500 crores in FY28 out of the $1 billion that we're talking about. So in terms of Indian rupee, I think next year will probably come somewhere near or even exceed about 1,000 crores or so. And also there'll be other clients addition, which will be in the advanced packaging area too. So right now we've got 3 clients in the modules area. One of them is power modules. The other one is MEMS modules of different kinds. And the third is also another power module. They're all large companies. And once we get approvals from all of these, one of them we have got, another 2 we have to get. Once we get approvals, I think we can probably look forward to even bigger businesses coming in.
Okay, all right.
Yeah, about 1,000 crores is something that you can probably look at.
1,000 crores in FY27, right?
Yes.
And this business will give you what sort of a margin? Obviously, as you grow and full capacities come on, then operating leverage kicks in. But on 1,000 crore of revenue, this will work at what kind of a margin?
This will be margin accretive to our existing business. I'd leave it at that. Maybe it will be significantly higher than the existing businesses.
All right. Got it. Hi, Mr. Sampath. Good morning. Good to see you in. And that $1 billion revenue target by when?
FY28 was what we had committed. Probably early in FY28 and 12-month running basis will probably exceed that.
Got it. So you have your target set in mind for the next few years. But let's talk about the near term, FY26. Right. First half of the year, you've done well, actually. You've grown by close to 47%. However, for the year, you're guiding for around 60% growth. So part of the street believes you're being a little too aggressive. And the second half of the year will require a very, very good, number to get to that. You'll have to grow by, I think, roughly around 68, 69% in the second half of the year on a year-on-year basis. You're sticking to that 60% revenue growth for the year, and also give us a margin band, because what was positive in the past quarter was your margins expanded, and it looked much better than competition as well. Product mix, operating leverage played out. So what is the rough range?
Yeah. So whenever we give a kind of an estimate or a guidance or a target publicly, it's based on a slightly longish term perspective. It's not just based on what happened last quarter or what is going to happen next quarter. That perspective, I think we can hold the guidance for this year, whatever we have given. That kind of growth is there in the order book for sure. Unless there are some major issues in the marketplace which are external to the company's or industry environment, I think we are set to achieve those numbers. In terms of margins, I think good news is that it's looking up a little bit because of the mix of different businesses that we get. So we are fortunate that in the order book as well as in the actual businesses in the first half too, we have had a margin improvement. And I think this will sustain in the near term, maybe a few years or so. And next year we get the newer businesses coming in. So they also are, from the perspective of margins, they are higher. Of course, we are always concerned about the quality of business. It's not just the margins, but also the technology that we have to employ to do it.
So, Mr. Sampath, 16 to 17% margin, you can maintain it, right, in this range for this year? And then
around 16% is what I would say for the year end.
Okay.
And we'll see. By third quarter, it will be up.
Just one more question, sir. At the start of trade, there were a lot of large trades that took place on your counter. Are you aware of who were the participants, who were there in the large trade? I'm getting some feedback from a couple of desks, but I just wanted to know whether or not you're aware of it. Who were the participants?
No. We see what happens in the marketplace. We are not aware of it, and we also don't bother too much about it because, our job is to make sure that the company's performance and the customers are catered to and so on. The remaining thing, what happens in the marketplace, is something which, frankly speaking, is out of our control. And we are also not aware of anything that seems to be happening.
Yes.
So people do what they have to do. We do what we have to do. That is outperform the expectations.
Now, just clarifying, sir, since we had you on air and since the stock was down and the volumes are big, just want to know whether or not you were aware of it. As you're saying, market does a thing of its own. You focus on business.
Sure.
Okay, well, I think we'll talk about the PCB thing in a later conversation. Got to it. But thank you very much for joining us. Appreciate it very much here on CNBC-TV18.